Chameleons and my favorite chameleon student appeared, Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Awesome. Let's go right to the disclaimer.
Yep. So good morning, everyone. Thanks for joining. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Yep. I definitely need some professional help this morning, my buddy.
Call your broker.
Stop. I need to call my AC guy. My niece stayed over and ran the air conditioning down at like 50. I didn't even know that was possible. And that was 2 days ago in the barn above me. And I see water leaking everywhere. No one can see it, but out there. And I went back and the air conditioner water's just pouring out. So I have no idea what's going on. Obviously it's humidity, but
yeah, is it
I
still
need
working?
Professional help right now. No, It's not working either.
All right. Well, I can't fix that problem, so you're gonna have to call someone else.
I will look for professional
help. So before we get started, what we're going to talk about today is option order flow analysis. Now, there are different ways to look at option order flow, like from so many different perspectives. And today, what we'll do is look at repeat trades. Okay, so I'll show you examples. That's the easiest way to explain it, but looking for some trades that are of significant size and that not only did the trade happen once, but we see it repeat coming in at least the second, third, fourth time in a row. And then what we're going to do is take those trades and try to look at the surrounding data, surrounding circumstances, and try to figure out what's going on here. Okay, so that's what we're going to do today. Before I get to that, though, let's just take a quick look, as usual, at the pre-market trading, see what's going on in the pre-markets, and then we're going to go to repeat trade screener. Sounds good?
Yeah, perfect.
Share my screen. So this here, we're on a pre-market report. These are stocks trading in a pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Looking down real quick, we got 44 stocks that made the percentage gainers list, 439 on the percentage decliners list. Now that's pretty significant because that list, if you see it every day, that's a really big list, on the percentage decliners. Usually you don't see that many stocks. So from that perspective, looks like very bearish bias at the open. I'm going to take a look to see what's going on in the higher market cap stocks and if there's a similar situation. So I'm going to take a look at market cap $20 billion or higher. And let's see what's going on there. So we've got no stocks that made our percentage gainers list, 152 on the percentage decliners list. So from that perspective, looks like a very bearish bias at the open. So we're looking at, right now, if everything remains like this, we're going to be, down at the open. If there are no questions on anything on the pre-market, I'm going to move on to the option order flow repeat trade screen.
Sounds good.
All right. So under here, under screeners, we got the option block trades. And this is probably a lot of people use this, you're familiar with, and this is just looking at individual trades, time and sales, and it's trying to filter out anything that's we would consider a big block. So I think we have a minimum of 50 contracts in one single trade or more. And then you could come here, take a look at this screener, list them, and you got like 113,000 yesterday alone. But you have all these filters to screen things out. Now, I'm going to go a little bit further and look for large trades that are repeating on the same line. So the same contract, same strike, call, same expiration. Do we see anything of significance? And what might be going on here? So I'm going to use these tabs up here and look at the repeat trade screen. All right, so before we use the filters, I'm just kind of go over what's going on here. So here it's looking at an option contract, so you got the symbol, you got the expiration. This is a call, 5 strike. And it's scanning to see, are there big blocks trading in that option contract? So, of 50 contracts or more, and how many times are they trading? So for example, in BSKR, this is saying that there's a total of 20 trades, 20 different individual trades that happen on this specific call that were at least 50 contracts or higher. Okay, so that's one part of the scan. Here I also have how many, you could say, how many repeats. I have it's defaulted to at least 2, right? So at least 2 trades had to happen, 2 block trades on the line to be a repeat. You could increase it or decrease it, but right now at least it's set to at least 2. The other thing by default that we have set, yeah.
I apologize. Some people came late and they just wanted to know how you get to this page again.
Okay, so under screeners, you go to option block trades. Okay, once you hit on option block trades, you're going to default to here, the option block trade. When you're in here, you have these different tabs that you could switch to. Okay, I'm on the repeat trade screener right here. Okay, so that's how you got it. Screeners, option block trades, repeat trade screener. We talked about 2 defaults here, at least 2 trades on the same contract, 2 block trades had to trade on the same contract. And then another filter that we added is this. In certain stocks, right, like SPY, it is not unusual to see repeat trades of 50 contracts or 100 contracts or 200 contracts on a single. It's not unusual to see that because it trades so much, right? So it might not even be anything that to filter out, you want to see something that might be of particular interest. So to do that, you want to try to see something unusual. Now, you can't really have an unusual volume on a specific contract, right? Because an option contract, it could have just gotten listed today. So there's no volume previously to reference, right? Today would be the first day. Plus option contracts, they expire. So, they could be a week, 2 weeks, if it's a weekly, it'll only last a week, 2 weeks, they expire and it's gone. So you can't really benchmark what is average volume for a specific contract. What we can do is see on average how many options trade on a specific stock. That's an aggregate. That's taking all the contracts that are listed. On average, how much do we trade? And then you can figure out unusual option volume. But to see if there's unusual volume on the specific contract, we could compare the volume on that contract, right, to, on average, the average volume. So let's say, for example, if on average 10,000 contracts trade in a specific stock, and all of a sudden we see, 5,000 contracts on trade, 5,000 volume on one contract, that's 50% already. You're 50% of the way there just in one contract. So that could be unusual. So here we have set it to at least 50%. In other words, on an average day, you see 10,000 contracts traded amongst and then all of a sudden you have 5,000 just on one. And you could raise this if you want to or decrease it. But let me set it right now to 20%. So I'm going to set this at least 20%. The other thing, what I want to do is take a look at the minimum notional value of a single trade. So maybe, you have 50 contracts that are worth $10,000. That might not be that unusual especially some stocks, like SPY or Apple. That's not that unusual. So let's put that to a little bit more of a significance and say each of these repeat trades had to be at least $50,000 or more in notional value. In other words, whatever, the trade was, if we took the price of the trade times the amount of contracts, the volume of it, it had to be at least $50,000 in notional value or higher. All right, so far, what I did was just use 3 of the filters here. Okay. So let's just go down first of all. I'm just going to take a look here. I got like 2 pages of them. So before I open it up and take a look, what I'm noticing really quickly is there's the last delta. And the delta of the options is just telling us if it's in the money, at the money, or out of the money, right? So the lower the delta, the further it is out of the money, right? The 99 deltas over here, 98 deltas, those are very deep in the money. They act almost like stock. So I'm going to skip the very deep in the monies because there are different reasons why somebody would be trading deep in the money. And, it would be too long right now to explain in this video. But, it could be delta plays. It could be, because there's special corporate actions, there are lots of different reasons why they could be looking at it deep in the money, but we want to take a look at the money and out of the money because something else could be going on. Somebody's paying premium, or selling premium, and that's where we want to kind of today focus on. So I'm just going to maybe just do this filter and look for deltas that are lower. So we got here negative 57 delta, that's a put. So this first one is BKE, that's the symbol. It's looking at the July 16th, 21 expiration, put 40 strike. This is the average price that was traded for these 5 trades. Okay, so here, this is what I'm looking at really quickly before I open it up. This is my first takeaway. There are 5 trades on this strike with 50,000 contracts or more traded yesterday for a total volume of 13,000 contracts. All of them added together is $3.1 million worth. So that's pretty significant in dollar amounts. The other thing I see is that this volume represents 193% of the average daily volume. So that's already significant too, because it's almost twice as much as what the stock trades on average per day. And this happened only in 5 trades on 1 contract. So that is pretty significant. I'm also seeing that 13,000 contracts traded, but the open interest in the morning, remember open interest, we only get in the morning. We don't know what the new open interest is until the next day because that's how the OCC open interest is based on settled end of day trades. So the open interest in the morning was 15,905, 13,000 contracts traded that day. So here's what we don't know. Did that 13,000 contracts add to the open interest, meaning that open interest was increasing, or was that closing positions? So that's what we're going to look at today. Here, it's not obvious. These could be closing positions, reducing the open interest, right? Or they're increasing their positions, and this would add to the 15,905. So we're going to take a look at, what happened there. Really quickly, I'm also noticing is that on what side of the market did these 5 trades occur? And this happened on the bid side of the NBBO. So all 5 were on the bid side of the NBBO. So remember, there's a quote, there's a bid and an offer. And then when we take a look at the trade, we say, did it trade on the bid? That's assuming that the incoming order sold on to a market maker. If it happened on the ask side, then the incoming order bought from the market maker, and then something in between could have been negotiated, so it's not as obvious, right? So these all so far look like the incoming orders were selling on the market quote. So let's take a look here on the open side. So here are the 5 trades. The first one happened at 1:38 p.m. and it looks like they were scattered. Then the next one 2:29, 3:10, 3:40, 3:57. So they didn't happen it wasn't in quick successions. It was like, they did a trade. It looks like an hour later, almost an hour later, they did another trade, then almost an hour later, so there was a lot of time in between of the trade. It wasn't like quick. Here, the first trade, 5,000 contracts, traded $2.35 for over $1.1 million worth of notional. At the time, the bid was $2.35. The ask was $2.60. Since it traded at $2.35, this traded on the bid side. So the assumption is this was a sell order. Okay, that's the inference we're getting, is that the incoming order came in and sold it on the market maker quote, resting order. Also, I see that the implied volatility was down on the day. So that gives me also an indication that it was a sell order. So whenever you have more sellers than buyers, the implied volatility, the assumption is the implied volatility is going down. Whenever implied volatility is going up, you have more buyers at premium than sellers. So 2 indicators here is that this initial order, 5,000, was a sell order that happened on the PHLX. And the stock price was $38.56 at the time. The next order that came in, that was 2,000 contracts, traded at $2.55. Again, that's on the bid, right? The implied volatility is lower from the previous day. We see that the stock declined a little bit, 38.26. So you got a better price from 235 to 255 because this is a put. So the put must have gone up, from in this time period. If you sold another whoever it was, sold 2,000 more. Again, same thing. The third time, another 2,000 looks like it sold on the bid. This 2,000 and this 2,000 both sold on the bid, right? So they're going right away. It wasn't negotiated anywhere in between, because you can see that the spread here is pretty big, so you can try to negotiate, but this was a straight, just looks to me like hitting the bid, getting out. That either getting out or establishing, a position on the short side. The last one looks like it traded at the lowest price of $1.90, but the stock was increasing at the time, 39.18. So the stock went from 38.56, 39.18. Looks like the implied volatility started out 56.9, was down to 55. So this is sell orders pushing down that option. Okay. If there are no questions here, I'm going to now go to the options chain, and then we're going to figure out, did this increase the open interest, decrease the open interest, and what might have happened on this particular trade. Okay, so I'm going to close this up, and if I click on this July 16th expiration, it's going to take me to the options chain, and we're going to look for this particular put, the 40 put, right? And we know the open interest the previous day was 15,905. What is it today? So I'm going to click on this July 16th put in BKE. And then we're on the options chain. So we're on July 16th. We see here 20,000 contracts traded total just in this expiration. I'm going to come here to the options chain, and I see this July 40 put. Here it is. It closed 210, 230, 15,899 contracts traded total. I'm going to change this delta here to open interest to see what's the open interest today, and see that the open interest fell to 5,234. So remember, it was 15,905. yesterday at the open. Today it's 5,000. So some of this was just closing closing those positions. Okay, the total open interest decreased. I could even open this up, 15,899, and I'm going to go over here and see what happened yesterday. So this is what happened yesterday. The option closed at 210, 230. The previous day it was 105, 110. So it looks to me like yesterday that put option increased, and I could see up here that the stock was down 7.6% yesterday. So it could have been somebody already taking a profit, right? Because the stock was down 7.6%. Maybe that was enough, took a profit. I'm going to take a look down here. This is how it started out, so it looks to me like there are a bunch of small one lot trades going on here. So there was other trading going on, 10 lots, 20 lots. I think that first trade happened, around 2. So I'd have to go, but you could see here it was trading a lot of small retail flow, looks like to me, just because of the size of it. And then I'm going to just sort this by quantity. So here it is, that first 5,000. This is how it traded. Let's also take a look at something else, tracking. I'm just going to go here and look at the puts. And I see here that July 6th, right? July 6th, that's really when the open interest increased. So July 6th, there's a bunch of volume, 30,000 contracts. The option closed at 105, 110. So you could see that day, it went from 10 cents, 20 cents to 105, 110, got bid up. It's up 600%. And the open interest coming in, at the end of that day resulted in 15,900. So increase from 2,400, 15,900. Yesterday, that option again doubled basically in price. And it looks like there's a significant reduction in open interest. So it looks to me like there's a 1 day open, stock went down, and then a lot of that was taken off yesterday. Okay, so that's just going through and trying to figure out what happened. Okay, and it looks to me whatever that big position was, maybe they think that most of that sell off, already occurred. Maybe that a lot of it was embedded in there. They look like they were taking profits on those options. So if there are no questions on that, we could do another one.
Yeah, no, that's interesting. Okay. I mean, it is interesting that the Chinese, I don't know if the position was initially taken because of, the DD IPO that went bad. I mean, so many things change overnight in China. There's a whole sector of these Chinese ADRs that, they seem to move in unison. When government does something against one, they all get hit. But anyways.
Right. Yeah. And this is a Chinese ADR right here. You're right.
Yeah.
And you could read about it, so that could have been going on, that whatever was happening. And sometimes you want to see, is there some kind of trend? Are they coming in after a lot of puts? Like you said, are there a lot of Chinese ADRs that all of a sudden you're seeing big put purchases? That could be a signal, right? Somebody knows something's going on and coming after. So you want to kind of see, try to paint yourself a picture. Well, this is odd. If you see a bunch of these Chinese stocks all of a sudden being put purchases, something might be going on, So I'm going to scan down here, maybe go to another one that sticks out. So let's take a look at the CHX. So this CHX, just I'm looking through with my eyes. It stands out because the open interest at the beginning of the day, it was very small, 51 contracts. So there were 3 large trades of 50,000 or more on this contract. The total volume added up to 1,150 contracts for these 3 trades for a total of $426,000. And that's 3 times the average daily option volume for this stock that happened just on this one contract. So that's kind of significant. And all these happened on the ask side. So just on the surface here, to me, my first, and I see it's a low delta. So this is an out of the money put. So to me, just looking at it, my first inference is somebody's buying puts in a long dated option in CHX. Okay. So that's the first assumption. They're establishing a new position. They're buying because they're happening on the offer. I'm going to open this up just to take a look, and we could see how it traded. So the first trade happened very early in the morning. Then there are 2 more trades that happen close to each other, like within seconds. Okay, so the first trade, 250 contracts traded. They paid $3.70 because you can see here the market was 323.70. So they paid the full spread, right? They didn't try to get 360. They didn't try to get 350. They paid the full spread, 370. That's a pretty big spread here, 50 cents. The total notional value of this trade, 92,500. We know it's out of the money. So this is all premium, right? This is just straight premium. This happened the second time it happened, 10/28/29. About an hour later, bought 450 contracts, again paying same price, 370. Okay, and for $166,500 worth. And then looks like maybe what is that, 5 seconds later, did it again, another 450 for the same amount. It looks to me like the stock price actually went down a little bit. They paid the same, and they paid the same amount for the put, so it was down 25 cents. And what's a little bit odd about it is that the implied IV, the implied volatility, is down. So it looks to me somebody is buying, but there might have been an offer on a book. Let's just take a look because the implied volatility is lower. So that is a little bit odd. So I'm going to take a look at this CHX. Okay, so I'm clicking on this. We're going to go to the options chain. And remember, these are starting points because you're trying to figure out something here is unusual. What's going on? I'm trying to figure out so then I could position myself the best way possible. Never a good idea to piggyback and jump on a trade unless you could create the thesis why you should be doing it. All right, so here we go. Here's January 21st, 2022, total of 1,644 contracts traded in this expiration. I'm finding the strike, the 22.5 put, 1,599 traded. I'm going to go to the open interest. And here I see that the open interest is 1,499. So remember, it was very low open interest in the beginning of the day, 51. So these trades resulted in the open interest increasing. So now we see 1,499. I'm going to open this up real quick. And we see that there are a lot of, the first trade happened 9:30, 250 contracts, trade $92,500 worth. Then I see some retailers looking like they're piggybacking maybe, 15 minutes later, they're coming after it, right? Maybe a couple here at 360. So you could see here that the piggybackers were actually getting better prices. Then we see, we see them continuing, piggyback. Maybe this one's a little bit significant, 30,000. There's the next one, 1028, 450 contracts traded, 166,000. Then we see more piggybacks, and that's how it traded yesterday. Okay. Here's another observation. I'm just gonna go into the tracking, the put. So we see here, we don't see any volume really up to then, like very, it's mostly zero. There's 51 contracts open, but this hasn't traded in a while. And then all of a sudden yesterday, 49 trades, 1,500 resulting in a big increase in open interest. So
you got to wonder something like this, like looking at it, something that I'm thinking about in my head. Like I looked at the stock, it looks like it's maybe been, whether it was an IPO or a, one of these reverse, however it got to the market, it looks like it's been in the market about a year.
yeah,
If insiders, if their shares are coming, I don't know what goes on inside the investment banks. You wonder if these are just insiders who are buying these puts. Is that even allowed?
yeah, but I'm going to make a really quick observation real quick.
All right.
I'm looking at it, and here's what I see: that these options are all the options around it. Look how wide they are: 65 cents, 215, 55 cents, 205, very wide. Look at this particular one, 22 and a half, 340 bid at 370. That's the tightest market on the board. To me, and look at this implied volatility, 62 offer, that's the lowest offer on the board. This is what I think may have happened. Somebody put an offer in the book of a big size that closed up this market. We have 138 days to go, offered it at a 62 volatility. Somebody scanned it, said, is this a good protection, 62 volatility? I'm looking at the stock volatility, long-term volatility 65. So you're buying a downside put at a relatively good implied volatility. If we revert back to the 52-week average, this could be somebody scanned, saw that there's a put on the book, looks like a limit order, put on a book, and somebody is trying to scoop this implied volatility. That's what it looks like to me. Because
wow,
that
look at you.
So that's my interpretation.
That's great.
Yep. They could be hedging it with stock, but that's where I'm seeing it because I'm looking at all the surrounding, all of the surrounding. And if you're an implied volatility person and you're looking to buy protection in this like stock that's 4.8 billion, so it's not a high, it could definitely potentially move. Implied volatility is subdued. This looks like an opportunity potentially to buy because anything could happen between now and January 21st. And you're getting a pretty good deal on that put. So that's what not necessarily it has to go down. I think it's just somebody looked at it and said, hey, this implied volatility is not bad for downside put in a stock that is going to potentially have 2 earnings up till then. It's a lower market cap stock. Anything could happen. It could be liquid. Market could go down. This could go down significantly. It's been as low as 687. So that's just kind of my take on it.
Well, it's a real good take, D. That was awesome. Everyone is blown away by the in-depth webinar this morning. Going really interesting places. Great job, buddy. It's now 9:33. We went over and it was well worth it. Thank you.
All right. Well, thanks everyone for joining. Stay safe out there. I hope you guys have a good trading day and hope to see you guys tomorrow.
All right. We are off, everyone. Have a great, safe trade.